Commodities Trading. Oops. Want to welcome everybody to the Futures and Commodity Trading class. Um, Hope everybody had a good week. I hope everybody is ready for a good week. So,
Well, hi, Mr. Johnny, Miss Barbara, and the rest of the commodity team and family.
Hi there,
Good
how you
evening.
doing?
good evening.
Hello, Mr. Scott, Ms. Barbara, and everybody else.
Hi
Hello,
there.
Jamal.
Mm-hmm.
Hello, Mike.
Hello.
Hello.
All right. So, what do we, well, let's give it a few minutes. Um, I think hopefully, we'll have more people coming.
What's up, D?
He's not on tonight.
Oh, okay. I saw. Okay.
That's me. You must saw his picture. That's me.
Uh,
Well, hey, Miss Barbara.
Hi
Hey,
there,
Brother Jamal. What's happening? How y'all?
Steve.
hey,
How you
hey.
doing?
What's going
Oh, you
on?
know I'm doing good. You know I'm doing good. I ain't
I
complaining
know.
about a thing. Like I said, let's get it on.
I know. That's right. We ready to talk Delvin's favorite subject,
Well,
trading.
Fred Huffman's here, so I guess we're ready.
Hey, Ray. If you hear these sirens, you know that they're coming after me because I escaped today.
Outstanding. All right, why don't we get this show on the road? Um, I'll turn it over to you, Miss Barbara.
All right. Welcome everyone to Futures and Commodities 101. Tonight we're learning the terminology and lingo part 2. This lesson can be found in lesson 2 in the manual of Futures and Commodities 101. I'll read our disclaimer. Trading and investing carries a high level of risk. You could lose some or all of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of risk, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means you alone are responsible for your actions in any trading or investing activities. All right, guys. So we have an event coming up next year. Hope you guys are excited. Hope you are coming. This is an event you do not want to miss. Um, 2026 Travel and Trade Retreat going to be in Gilbert, Arizona. Anybody that's ever been has always enjoyed themselves and has learned so much. Things that you learn in person, you don't get on this call. Delvin always comes with secret strategies that he does not teach on Sunday on either one of his calls. So it's worth being there. And it's good to be in person as well. Mr. Johnny is going to be our extraordinary mentor, of course, along with Eric McBride. And we have a special industry person that is going to be in attendance. It's a special surprise. This retreat we're offering a payment plan for. So it's called a firm, so you could use that to get your tickets. Visit our website at futuresandcommodities1on1.com and click on the events page, and it will take you there. And I have a video to show you guys from someone that has been at our retreat.
Would you like to share anything, Sean?
Yeah, this weekend it was absolutely amazing. From the minute that I walked in the door, the camaraderie, the rapport, relationship building, that with everyone there, everybody being on the same accord, your level of wisdom was just awesome. And the way that you were able to teach us was amazing. Everybody got it. And I saw more than just my aha moment. But it was from the Yukon, and I agree with Tanya, with Johnny B, with the Southwest thing. Everything just clicked and it just flowed. And you know, who is it? I know I've heard TD Jakes say this: when preparation and opportunity meet, success is inevitable. And I think that even the preparation through the Zoom calls and your leadership, I mean, success is inevitable. All we have to do is follow you, your levels of experience, your wisdom, everything. It was great. Learning how to read the charts. I'd be on a Zoom call and I would see them and I was like, okay, yeah, that's a chart. But like Tanya, Rose, and John said, to be able to be in the room and to interact and to actually see it and almost just physically put your hands on the TV to see, oh my God, I see the formation, so that, I can't even explain that in words, the experience that was. And I'm ready, I'm ready to do this full force. And I'm also ready for another training. Like, we want more, Delvin. So don't procrastinate and put it off. But thank you so much. Thank you so much.
Hey, I want to just say to you though, because I think it's important that people need to know that, Sean, I remember the day when you joined the group, and if my memory is right, it hasn't been but about 3-4 weeks at the most since you joined the group, and you just joined the group. And you getting on a plane coming all the way to Arizona. Now, if that don't show somebody who's serious about this, I don't know what does. A new person in the group, new to trading, had never traded before, don't know anything about trade. And she said, I'm doing this, I want to do this. Every time I post a chart in the room about what I was looking at, my phone rings. Every time. Somebody called me, Devin, what are we doing? That what you getting ready to do? That what we doing? Do I need to be getting ready? So I knew you was ready before you came to Arizona, but just watching you, listening and writing your notes, and I even heard you a couple of times say, oh, I just had an aha moment. I heard you say it, I just had to keep on in my flow of what I was doing, but I heard you a couple of times talking to you, say it out loud, wow, I just had an aha moment. And I just wanted everybody to know this woman just joined this group and she was here in person, and she got it. She was saying at first, I don't really get it yet, Devin. I don't understand it, but I'm coming to this training because I want to learn this. And I saw yesterday that you really got it. I saw that, Sean. So thank you for coming out. It's been fun getting to know you, spend time together. And most importantly, I think the friends that you made an impression on a lot of people, because I've had a chance to talk to everybody, most everybody that's been here, and they speak really highly of you. So the impression you made on the people, not me. You may not even know what you did, but you made a huge impact on the people that you met here at this event.
Well, they made an impact on me first, because I was like, I remember calling and telling my mom, I was like, this is just the most awesome group of people. And you just know when something works, or when it's divine. I think it's divine. I think everybody that was in the room, it was just a divine connection. It was peaceful. So that's how you know when something is, that God is in it. That's how you know.
Hmm. Awesome. Thank you, Sean.
You're welcome. Thank y'all, everybody. You too, Johnny B.
Thanks.
Awesome, awesome, awesome. Mr. Johnny, did we have quizzes?
Yes, I think we had a quiz or two.
We did. You want to go over the quizzes before we go further? You want me to get the quizzes?
I'll let you go ahead and do it.
Okay.
I don't see that we have Thora here.
I know I looked for her on the line. I didn't see her. Let's see. Okay, our first quiz is: you own a cattle ranch and you're concerned about the changes in price. Who would you be in the market? A, hedger. B, speculator. C, market maker. D, commercial. E, none of the above. F, all of the above.
Hedger.
Somebody said hedger. Does everybody agree with that?
Hedger.
Everybody say hedger. Let's see. Well, you guys are correct. It's a hedger. That's who you would be. We know somebody on the call now. It owns a cattle ranch. They're a producer. Mr. Johnny. All right, quiz number 2 is: what is the main job of the CFTC for the futures and commodities market?
Regulator.
A, regulate. B, supervise. C, protect. D, all of the above. E, none of the above. We have some different answers for this one.
Yeah, we got a
Yeah.
regulator. What else we got?
Supervise, protect, all of the above, and none of the above. Who? Somebody somebody said regulate.
Now, you know what is crazy? Because like when you posted the test, I chose all of the above, but then I had to listen to the question. It's the main reason. What is the main reason? Not saying that the other ones aren't, it's saying the main.
Okay, so
Who wrote this question?
I did. It's a trick question too.
That's
I
what
on
it was.
purpose put it like that. I was saying,
Yeah,
who can I stump with this question? I was
yeah, you
laughing
did.
when I did it.
Yeah, you did. Because you stumped me because I put an answer in there. And then I went back and said, wait a second, they cover all of them. So, and then I read it again. I said, oh man, I done too much.
Well, let me tell you. So, Mr. Johnny, do you want to tell him the answer?
If we're talking main, we're talking regulate.
Oh, well,
But it is
Yes,
all the above.
sir. That's the trick. That's the thing right there. The main.
Yeah, but it is all of the above.
Yeah, it's all of the above.
All righty. What else we have?
Let's give special thanks to the CME Group for their videos and education from CME Group Incorporated. So we are thankful. We know that CME Group is huge in this space and they cover a lot of different exchanges. And then there's barchart.com. There's our go-to platform for website and education. They're the leading provider of real-time stock and commodities data as well. And then what do we have here? We have an amazing book that we want everybody to get. If you have not got this book yet, it's actually what we're teaching out of this course every Sunday night, called Futures and Commodities 101, by Delvin, Dr. Melba, and myself. So if you got the book, if you could kindly leave us a review, that would really help us out. We would greatly appreciate it. All right, Mr. Johnny, over to you.
All righty. Okay, so what we're going to talk about tonight is, if I'm not mistaken, we're going to talk about lingos and different information. Now, we're going to talk about first, this slide's about market analysis. Market analysis is the studying of the market through through key market factors called supply and demand. The market behavior, this or your position in the market, market cycles, news, weather, etc. Okay. So we've watched a video on this. We talk about supply and demand. Okay. You'll hear this over and over and over again because it really deals in every market that we're involved in. You hear sometimes the number of buyers, the number of sellers. But anyway, basically what we want to talk about is supply and demand. Supply is the total amount of the specific product or service that's available. Excuse me. Supply can relate to the amount available at a specific price or the amount. And demand, all right, is the amount of a product or a service that a consumer is willing or able to purchase at a specific price. Okay. Understanding the market behaviors, how market participants make decisions in the market. So this is what we were on a call earlier and we were going over this quite a bit. You know, what kind of decisions am I trying to make when I'm looking at a trade? Why? Who? Where? How? What? When? You know? So these are some of the questions that we ask ourselves. Why are we in the market? Okay, next. Okay, here's one of the terms that we use. A bullish market. All right. The buyers are in control of this market. When you're bullish, you're going long on the market. Or you're buying the market. Buyers expect prices to rise, right? Now, why do we use the bull? When the bull fights, he thrusts his head up, right? So you can think of as bullish as we're looking for an up market. And on the other side of that is bearish. So that means we believe the market's or the sellers are in control, meaning we expect the market to go down, so we're going short the market. Short the market. Okay? The sellers expect the price to drop. When a bear fights, he fights by swiping down on his prey. Okay? So, bull up, bear down. We have three positions in the market. Long the market, short the market, or out of the market. I want you to think of those three positions: long, short, or out. That out position will mean a lot later. Okay, next. All right, so when we start looking for information on how to trade, there are basically two types of information we're looking for, right? This consists of a trading approach to the futures market, which is either technical or fundamental. One person can be both. Typically, fundamental information is information we hear on the news, which means the market's already traded on it. Technical is the charts. We're looking at, well, I've heard this statement that the market doesn't repeat itself, but it rhymes. Okay? So that means when you look at the historical charts of how it's performed in the past, and the past can be as much as an hour ago, okay? We're looking for technical information that can help us predict what the future is going to be. When we look at fundamental information, we look at that information on how did that drive the market as it relates to supply and demand. Okay. Is this a video?
There are many factors that traders review and analyze when choosing what futures contract to trade or what direction to trade. Some traders might look for trends on a chart, while other traders might look at increasing demand for a commodity. This evidence that traders use will typically be classified into two broad categories: fundamental analysis and technical analysis. Both types of analysis allow a trader to collect evidence to form a decision about prospective trading opportunities. The analysis will form the basis of where the trader thinks the market will move, and thus whether to buy or sell a given futures contract. Some traders only use one type of analysis, while others use a combination of both fundamental and technical analysis to identify potential trades and trade entry and exit strategies. Trade data can be collected from multiple sources and rarely falls into just one category. This collection assists traders in painting a more complete picture of the markets they are trading. Fundamental analysis refers to analyzing the factors that contribute to a futures contract's supply and demand. For example, a trader might review product inventories to form an assumption about potential supply increases or decreases, thus causing future product price fluctuations. Based on fundamental analysis from the inventories report, the trader may buy futures assuming upward market movement. Technical analysis uses patterns produced from price direction to predict future market movement. Various indicators or visual patterns are tracked and may indicate potential price movement. For example, a technical analyst believes that there is strong resistance at $100 per barrel of crude oil. This is based on downward price movements occurring every time after crude oil reached that level in the past. Conversely, the fundamental trader researched industry production costs and determined at $100 per barrel is the level that prompts many oil producers to turn on wells not previously operating. This causes an increase in supply and subsequent decrease in price. Fundamental and technical analysis of a futures contract can provide the same information to a trader. Technical and fundamental analysts can also analyze markets that are interconnected. Fundamental analysts will model the relationship between two markets and attempt to understand how supply and demand in one market can affect supply and demand in another market. For example, in the livestock market, if feed costs increase, so too will the cost per head of raising livestock, while a technical analyst will chart both commodities on a single chart and look for correlations between the two products. Technical and fundamental analysis show information differently to the trader. However, the end analysis can result in the same trade being placed. Traders can use either method to analyze individual futures contracts or to evaluate the relationship between futures markets.
Oh, now we're going to get, we don't normally cover this subject, but I guess we will. So there's market trading styles. A swing trader, in other words, we're going to swing up and down and sideways in a price and hold your trade over a longer period of time. Okay. The day trader he's placing his bet, and at the end of the day, whether he wins or loses, he's out. Okay. And the scalper only holds his trade for seconds or minutes. We do not typically teach these styles of trading. Okay. We are swing traders. We want to buy and sell a futures contract and hold it for several weeks based on the technical trading that we had. I want to say something here. The fundamental trader can trade on a lot of information, which means you got to go out and study the market that you're in. We don't typically teach that.